Spot Bitcoin ETFs seen record flows just under a year into trading. Since President-elect Donald Trump's victory alone, the 12 ETFs have seen about $10 billion of inflows. These ETFs are now the largest holders of Bitcoin, even surpassing its creator, Satoshi Nakamoto. For more on the ETF market as a whole, we've got John Maier. He is the chief ETF strategist at JPMorgan. It's great to have you in studio, John. Thank you so much. It's interesting, not only the flows that we've seen into Bitcoin ETFs, but this morning BlackRock saying that they came out with this recommendation of 1% to 2% exposure to Bitcoin ETFs because of the amount of questions they were getting from clients about it. How are you fielding those questions, and how are you thinking about Bitcoin ETFs as a competitive factor in the broader market?
Sure. JPMorgan does not have any Bitcoin ETFs, but what I think it really shows is that the versatility of the ETF structure in and of itself, that various different asset classes can be utilized inside that structure, and how that can be infused into different portfolios. Certainly, certain places want 1% or 2% exposure, but that's really a personal decision in terms of asset allocation. But again, the choice is there, and the ETF provides many different choices, and that's one of the key aspects, the accessibility of the ETF structure.
When it comes to some of that growth and opportunity and interest, more broadly speaking, I think even when you talk about the adoption in the mainstream, kind of going back to Maddie's point, and what we've seen, the reception for Bitcoin ETFs just really speaks volumes about how far this industry has come and what that involvement has looked like. When you take a look out to 2025, where are you seeing those most attractive opportunities, or where you're expecting maybe to see the most activity then in the new year?
Well, first of all, we just hit over $1 trillion in flows this year. That's the first time ever, so that's quite incredible. So it's about a $10.5 trillion industry at this point. So it's huge, $14 trillion globally. What you are seeing, some of the trends, particularly in the US, is the issuance of actively managed ETFs. Yeah. So think about this. There's 8% of the assets are active now, but 30% this year of the flows are actively managed ETFs. So there's been a real shift in towards both the issuance as well as flows into actively managed ETFs, which is really kind of a shift in the overall industry.
That's fascinating to me, because to me the finance 101 is like park your money in an ETF because it's a way to hedge and not be actively managed. It's a passive investment vehicle. Explain to me that shift that we're seeing and how kind of investors who are looking at this as a method of retail investing should be viewing that.
Well, ETFs grew up passive, but certain regulatory changes that occurred at the end of 2019 allowed for issuers to have benefits in terms of PMs could do different things in terms of tax efficiency. And then 5 years later, from the end of 2019 to now, you're experiencing 3- and 5-year track records for a lot of different ETFs. So you're seeing a big shift in the overall asset management business into the ETF space because of that versatility of the structure. They're liquid, they're accessible, they're cost effective, and they're tax efficient. And the superpower really is the tax efficiency. So, I mean, that's really what's driving this.
And John, there's a ton of it. There's more active ETF products available, I believe, than passive ones here, but they still only represent, I believe, about 15% of total assets under management, if that's correct?
Well, overall, in fixed income, yeah, 15%, and overall, 8% of assets.
So overall, 8%. What do you think those numbers then look like, given the growing popularity of actively managed funds?
Well, if you think about the flows this year, 30% of the trillion-dollar flows have been into active. So that increases every single year as you are seeing different mutual fund managers get into the ETF space. And when you gain that track record, that helps you get onto different platforms, that helps the distribution, creates the awareness, and then you have the optionality to use an actively managed ETF for many different clients.
Well, John, it's great to have you here on set. Thanks so much for taking the time to join us.